Mr. An, whether the audio is good. We can see that your microphone is still muted. No, I don't know. Is he back, Bona?
He's here, but I can't. Yeah, he's here.
Yes, it's okay.
Ah, great, great. So
Yes.
all right. So we are. I can see from our register we are a bit increasing. We have 35 participants already in this session. Uku, are we good to start? Can we start already?
Perfect.
Okay.
All right. So again, thank you very much, dear participants, and of course our speakers, which I'll introduce quickly also a bit later, for joining this interesting session today in the frame of PPD 10. So let me do my short introduction or opening of this session. I'll be moderating this session. Hold on, I think we can still hear some uh, background noise. If you can kindly please mute your microphone. All right, great. Thank you very much. Yeah, so I'm honored to moderate this session. I've been working for GIZ or GTZ before in the last 15 years in the topics of SME finance, microinsurance, and climate and disaster risk insurance. So this is quite a long journey for me already in GIZ as a company. And then in this long journey, I've been closely working with government authorities, insurance industry, and then the financial sector in the 7 MEFIN member countries. Here it includes, of course, the Philippines, Indonesia, and Vietnam. So let me just provide some few context of this session. First, we know that insurance plays an important role in supporting people, especially the low-income sector and the businesses, most especially the micro and small enterprises, for them to quickly get back on its feet after disaster events such as typhoon, flood, and earthquake occur. However, we also know that climate and disaster risk insurance is expensive by nature because disasters are considered unpredictable and vast. So we see an increasing frequency of occurrence and also increasing severity. And then we always say that this is associated to changing climate. Another context here is disaster risk reduction, which is our main topic for today in this PPP, is key in terms of reducing risk exposure, and one of the key ways to lower insurance premium, or maybe we say maybe one of the key ways to lower insurance premium, because of course we will still engage into discussion on this, so that it could benefit the beneficiaries, the policyholders, and even also the insurers. But however, these DRR measures are often also not considered in the technical aspect of pricing, and then also in the insurance products. So in this session, we aim to discuss with both insurers and insurance regulators. So we have 5 speakers today, and then look at engage them on their views on how DRR could best be used to make climate and disaster risk insurance much more affordable. We will highlight what is currently done by insurers and regulators. We will also see whether there are missing aspects there, what are the obstacles, and what are the opportunities for the different stakeholders. So if we can move to the next slide, please. Now, we will start the session with 2 brief presentations from our 2 insurers. and then this will be followed by discussion at the panel. So from the two insurers, let me introduce at this point, we have Mr. Roy Miklat, who is the President and CEO of the Cooperative Insurance Systems of the Philippines. It's a composite insurance company owned by cooperatives. And then we also have from Vietnam, Mr. Nguyen Ngoc An, the Deputy General Manager of the Property and Engineering Insurance Division of uh, one of the largest insurance company in the country, if not the largest, Bauman Insurance Corporation. And then we have three experts from the regulator side, starting, of course, from Vietnam, Ms. Nguyen, who is the senior expert in the General Insurance Supervision Division of ISA, or the Vietnam Insurance Supervisory Authority. And Attorney Brian Gale Sibuyan here is the Division Manager of the Regulation and Enforcement and Prosecution Division of the Insurance Commission of the Philippines. And lastly, but of course, definitely not the least, Mr. Eddie Sityawan, who is the director and also the senior executive analyst of the research department of the Financial Services Authority, or called OJK, in Indonesia. And so just to say also about the timing of the session, because this is a bit challenging. We have 5 speakers, and we thank you very much for actually calling, responding to our invitation. So each speaker from the private sector would have up to 8 minutes to deliver its presentations, and then right away we will go to the panel discussions. So part of my task, lastly, is just to also manage the time. So please bear with me if I'm going to remind, if necessary, the speaker to speed up. And then last reminder from my side, if we move into the next slide, is about some house rules, as we call it. So again, please turn off your microphone and webcam if you are not speaking. This also helps in terms of increasing the bandwidth. And then feel free anytime to post questions or comments in the chat box of this MS Teams. And then lastly, you don't need to take notes, because we will share with you the presentation materials via email and through the Facebook group of the MEFIN network. Next slide, please, Bona. So without much further ado, I'd like to give the floor now to Roy for your presentation. You have the floor, Roy.
Thank you, Dante, and good afternoon to everyone who are present here, our colleagues from ASEAN and other countries. Just an introduction, one CISP is a cooperative insurer owned by cooperatives in the Philippines. We have been working on the climate disaster risk insurance together with GIZ. As you all know, in the Philippines, we are one of the countries that is part of the Ring of Fire. And this is one of the challenges for us among insurers, particularly us as cooperative insurer, where our clients are basically on the grassroots or the lower income group of the Philippine population. So next slide, please. This session is using DRR to make CDRI more affordable for the low-income groups. If you look at the risk index for natural disaster in the Philippines in 2020 by type, the two highest and always present in the Philippines are earthquakes and tropical cyclones. There are about an average of 20 tropical cyclones that enter the Philippines annually. And this cost us about 2% of our GDP. When a typhoon strikes the Philippines, it costs about 2%, and then to recover another 2%. So this is a recurring cost for the government. And when you have a government that is also, that is challenged by its archipelagic nature, it it's very hard to recover for some country or some provinces that are always susceptible and vulnerable to typhoon and earthquake. Particularly the island of Luzon is the most vulnerable, and the National Capital Region is one of the most hit, not only by tropical cyclones but by flooding due to uh, deforestation among the mountain ranges surrounding the National Capital Region. The next slide, please. So we always, with CISP, we always look at climate risk insurance as a contributing factor to improve capacities of people to reduce poverty and making poor and vulnerable people more resilient. Uh, it should these capacities that should be developed among the population should be anticipatory, absorptive, and adaptive capacities, in which we are looking at some examples that we have done by introducing a more responsive communities where cooperatives are present. Our advantage is that our cooperatives are present in almost all municipalities in the country, and they are the very organizations that are in the front line or the last line in terms of delivering services. So we have some initiatives in looking at how can, when a cyclone or a typhoon strikes, we work with local governments for the victims that they should be relocated to a more secured area, be owned by the local government unit. And we have partnered with some organizations in Camarines Norte and Camarines Sur in Bicol during the last 4 typhoons that hit the Philippines last year. And we have relocated some uh, victims to a more secured based on the GeoRes uh, map that we have looked at. And we have partnered with the academe, with the LGU, and with NGOs and the cooperative insurance system of the Philippines. And we are making headway in terms of looking at it. And this year we will see if our initiatives uh, were making headway, and we will be looking at if the actions that we have done will bear fruit should typhoons come in this year. So these are the things that we have been doing, and hopefully we can uh, replicate it in other parts of the country. Next slide, please. This is how we do it in our areas. Risk transfer coming from the cooperatives, which are our front line, and their members. Some of the risks that we would like, a lot traditional risks like fire, typhoon, but we have managed to modify some products which include now climate risk in a very modest way by using the pag-asa indicators, and there have been a good takeout for the members of the cooperatives, particularly among micro and small enterprises, which we are offering now. We will see how it goes, and within this year we can see the data that will be coming in based on the initiatives that we have been doing. Right now, next slide, please.
Roy, Roy, you
Yeah,
have 1 minute, please.
yeah.
Thank you.
Right now, we are working with DOST, Celsius Pro, and GIZ to to develop a new product with can be considered as CDRI. And later on, during the reaction time or the question and answer, I can explain it more and how we are doing it with DOST, Celsius Pro, and GIZ. So thank you, Dante. And
Thank you very much, Roy. That was right on time. And please, again, dear audience, please feel free to already put your question or comments in the chat box. We will come back to that later on. Now, at this point, I'd like to call Mr. An to
Yes,
deliver. Yeah, so you have the floor, Mr. An.
yes, please.
Next slide. Yeah, go ahead.
Yes, good afternoon. Nice to chat and to work with you today. I'm the Deputy General Manager of the Property and Engineering Insurance Division. However, for the agricultural insurance, it is the new field that I've just joined about nearly 1 or 2 years ago. And of course, I had to learn from you a lot. For my presentation today, I would like to talk and to show you about the risk management for agricultural insurance, because the agricultural insurance in Vietnam is quite new, and also we met a lot of challenges in our market and also in Vietnam. Yes, for the contents, I would like to present briefly about the contents. The first about background about me in agricultural insurance. The second is about the challenges in developing agricultural insurance. The third is the proposed plan for risk management. And for the fourth, we will have the question and answer with you to discuss in some areas that we have to discuss and to study mutually from one to another. Yes, next please. Yes, for briefly background about me in our company in agricultural insurance for Vietnam. Yeah, as you know that before the issuance of the decision 315 dated March 1st, 2011. Yes, for the insurance products for rice in Mekong Delta, according to the Mekong Delta Water Index, the government already issued the decision 315 for these products. And then for the implement of the coffee tree insurance products in Đắk Lắk, according to the draft index. The second one is for the implementation of the decision 315. We already experienced with the insurance for rice and also for shrimp. Yes, and also about the livestock as well. Yes, and after that, after this pilot program, now we uh, already implemented the decree 58 and decision 22 of the government. Yes, it is quite similar to the decision 315, but they apply selectively in risk and also for the other, and also for some the innovation of technology, like the rice technology. Now they applied. Okay, please. Yes, from bombing, we learned some lessons in the agricultural insurance. For the product that we saw, we have to design the simple, easy, and suit to farmers. We had to go through the sales channel of agency, individual who are close to the trust for the people as the agricultural officer. Then the other is for training and communication to the farmers, the cooperation and support from authority and concerning parties. It is very important because they are the organ that they can they can exchange about the information and for the technology to the farmers and also to connect to the insurer and other organizations. And the fifth five is for technical and technological innovation for risk management. It is quite important in Vietnam because in the past and up to now in Vietnam, almost of the farmers have been working very simply in their facilities, in their background condition, and some others like the farming condition. It is not so good condition, so that the risk exposure is quite challenges quite high, and of course the insurance for our business is quite challenges. Yes, please.
Yeah, Mr. An, you have 2 minutes more.
Please.
Thank you.
Okay. With the challenges in developing the agricultural insurance is the farmer. We have some challenges is that the farmers are not willing to buy the insurance. The difficulties in reinsurance arrangement due to the historical data. The historical data is quite difficult in Vietnam, and of course it will lead to the some difficulties in reinsurance arrangement. And the fourth is for the lack of experience in risk management. As we in Vietnam, we have to learn many technology of risk management from other better countries to update and also to innovate our technology to have the better risk management. Yes, of course, in that case, we meet many difficulties. In that case, we have to have the proposed plan for risk management. Is for the general, the technical and technological innovation. The second one is for the medical service innovation. Especially for rice, we have the new. We have to apply the new technology instead of the traditional static data, because in the past and up to now, almost data are very traditional in statistic. So it is quite a long time to take this data. The second one is the new machinery equipment have to be installed, like CCTV or like automatic fertilizing system, in order that we can improve our condition to reduce the risk exposure and to control and to manage the risk. For the livestock, we have to improve the farming conditions. For example, the water source, the CCTV, the automatic ventilation, the remote medical check, and also the vaccination as well. Okay, next slide, please. For aquaculture, it is quite similar to others as before. Like we have to improve the farming condition, like a water checking system, like automatic medical check, and also vaccination as well. Okay, please. Okay, that's all. I had a short, very brief presentation about our experience, and also I have some like the like idea of our proposed plan for risk management. And of course, in this webinar, I would like to learn from you how to improve better and better condition, and also the risk for having the better development of the insurance products in Vietnam. Thank you very much.
Thank you very much as well, Mr. An, for that presentation. We will also come back to some of the points. And now we immediately move into the panel discussion. There is a large sound. There is a large background sound. All right, thanks very much. Next slide, please, Mona. All right, so here the format, we are actually prepared kind of two questions that we'd like to ask our regulators. This actually the same questions that we are going to ask OJK and then Insurance Commission and ISA. So here, let me start the question with Eddie, with these two questions, which I'll read. How could the enabling conditions and regulations... All right, now it's quiet again. How could the enabling conditions and regulations contribute to linking disaster risk reduction with the pricing of the products? And the second one is, how can regulators and state the government provide incentives for insurance companies in terms of promoting risk reducing activities. From your perspective in OJK, Pa Eddie, please. Mr. Eddie?
Okay. Do you hear my voice?
Yes.
Yes.
Okay.
Okay.
Okay. Thank you very much. Good day for everyone. Thank you for these invitations. Okay, I'll try to explain and answer the question that you asked to us. First of all, I would like to introduce about OJK itself. OJK is a regulatory body that supervises financial institution in Indonesia, including bank, capital market, and non-bank financial institutions such as insurance companies. As we know that Indonesia is geographically location along the equator has made it vulnerable to natural disaster. Every year we faces with many kind of disaster like earthquake, flood, fire, burst, and others. Situation Indonesia currently facing approximately about USD 1.4 billion financing gap to cover loss caused by disaster, and of course we have a limitation from the government to support these situations. Therefore, OJK try to find how we can support in the side of what we think about the enabling environment. First is that we should have like a generic model for disaster insurance scheme, especially for MSME. In order to achieve this, that OJK is collaboration with Indonesia General Insurance Associations, Indonesia Life Insurance Association, and Indonesia Sharia Institution formulated several micro insurance products, such as micro loss insurance, housing micro insurance, volcano eruption micro insurance, earthquake micro insurance, life micro insurance, and Sharia micro insurance. On the other side, government support with premium subsidy for micro insurance. Another support from the government, currently government also preparing a regulation to protect government asset with disaster insurance. Also, government also preparing disaster insurance pooling fund. Another important thing that what we think about enabling environment is supervision, education, and customer protections. OJK conducting supervision, also conducting educations with local participant, I mean local government also. Also we have a customer protection mechanism. And for additional about how we can increase the role of the government or regulator to support development of the disaster risk, I would share to you that last year we conducted a research to determine MSME demand and behavior toward purchasing natural disaster insurance and measure the performance of the current natural disaster insurance market. That we have an interesting conclusion. First, that MSME is a potential market, but not yet optimally worked by the insurance industry. Factors that influence the preference of MSME to purchase disaster insurance policies, such as internal factor including financial capability, the amount of premium, financial access, preference for disaster risk compensation, claim value, and external factor including the intensity of disaster and the impact of disaster damage. Second, customers who have access to finance such as they already have a account in bank, they receive a loan, a micro loan, for example, they have a preference to increase their interest rate to be paid if the credit has disaster insurance features. Yeah.
Mr.
Another
Eddie.
important thing. Yes.
Yeah, sorry to interrupt. Maybe
Enriching the. Yeah.
if we can go a bit deeper in the different regulations that you have mentioned, is there something there that would influence in terms of pricing the different products? I mean, going back into the disaster risk reduction point, is there something in the regulation that we could say this one could influence the pricing, making it much more affordable?
Yeah, for the pricing that currently government give like subsidize
All right.
or micro insurance that we think can increase the participant, but it is not enough. Another important thing is how the insurance insurance companies have to maximize their marketing media, such as they use the late digital technology, e-commerce, and other social media. This is the challenge for the future. Yes.
Right. Sorry, Mr. Ide. Maybe I'll get back to you, but I have to a bit manage the time and then move
Yes, please. No problem.
into the other regulators. Can we bring in now Mr. Kuyen into the floor? Ms. Kuyen, also the same question for you in the context of Vietnam. Is there some specific in the regulation that would contribute to reducing the pricing of especially your agricultural insurance products now?
Good afternoon. My name is Quyên. I'm from the General Insurance Supervision Division, Vietnam Insurance Supervisory Authority. As the government and regulator, we are aware that the low-income groups and micro, small, and medium enterprise are mostly excluded from insurance service for a number of reasons, such as unaffordable premium, mismatched product, low financial literacy, lack of resource and access to meet requirements for a formal financial institution. So we have a different policy area in the CDRI as a role for sustained development, such as the disaster risk reduction and management in the law and natural disaster prevention and mitigation. For the climate change adaptation, we also have the Prime Minister decisions. And for financial inclusion, we also have policy for promoting credit for development of agriculture and rural area. And as you know that Vietnam also have the incentive policy for promoting investment in agriculture and rural, decree number 57 and decree number 58, policy on agriculture insurance, and the others strategies for rural development and social protections. However, they are not in the one strategies for the poor and vulnerable generally. So we think we need to set up a strategic framework for one single strategy, like strategy for climate change for target groups. That first of all, we should have the strategy for target group, especially in the climate change, and also in we also promoting how to apply the Thai technology in CDRI. such as the rise, like Mr. Nguyễn Ngọc Anh just presented a few minutes ago. You satellite, or recently the Prime Minister just issued the decisions on the mobile money in Vietnam. Is promoting access to financial service in remote and isolated areas. This is very new Prime Minister decision, and we hope this it will promoting access for poor and for poor people access to the financial service. And we are considering set up the legal framework and enabling set up for the poor for the CI pool, the risk pool, because we think that pools are working to improve affordability of the product in a natural disaster through a variety of means. It we reduce the operating cost for the disaster risk insurance. This is the some brief enabling condition from the government side in Vietnam.
Yeah, thanks a lot. Thanks a lot, Ms. Queen. So it's also similar, I think, in Indonesia, you also have some subsidy element there to the agriculture insurance, and it's also kind of way of how we can bring price into much more affordable level. And then you also mentioned about technology. Later on, also we will combine this and see what does it mean to the insurance providers. But in the meantime, I'd like to request Attorney Brian to also tell us something in the context of the Philippines, based on what is there in the regulation, or is there something that we can call an incentive? You have the floor, Brian.
Good day, everyone. Perhaps on the first question, basically the Philippines is ranked as one of the countries with a high-risk profile, considering that the country is exposed to earthquake, typhoon, flood, and other acts of nature. This is mainly due to its geographical location and archipelago state. Nevertheless, the Philippine government is doing its best to manage the causes and effects thereof. Before, the focus was just for disaster preparedness and response. At present, we are shifting to disaster risk reduction and management. Thus, several measures were put in place intended to protect the environment. Simultaneous to these, infrastructure projects are continuously being implemented, where some of which are intended for risk mitigation or disaster risk reduction. The presence of these DRR measures affect the hazard mapping, risk appetite, and pricing of products being observed by insurers and reinsurers as well. Hence, insurers would be more than willing to cover risk in areas where there are DRR measures, such as the construction of dikes, reforestation projects, proper drainage systems, structures built with stronger materials, as compared to areas which have barely to minimal DRR measures. That being the case, these DRR measures greatly affect the pricing of CDRI products, as there are more insurance companies willing to cover risk in areas with DRR measures. Competitive pricing takes place. Be that as it may, we have to note that the Philippine Insurance Commission currently imposes rates in pricing CDRI-related products. Therefore, insurance companies have to price its products in accordance with such regulation. While there are corresponding advantages and disadvantages in observing the tariff rates being prescribed by the Philippine Insurance Commission, it is certain that such regulation affects the pricing strategy of insurance companies with regard to CDRI products. Perhaps it is worth mentioning that awareness of the consuming public insofar as securing insurance and the benefits of having one is concerned likewise plays an important factor in pricing CDRI products. I think the microinsurance division of the Philippine Insurance Commission is actively engaged in promoting and providing information campaign insofar as microinsurance products are concerned. And together with this bandwagon, several microinsurance providers tag along in order for them to properly introduce or make their products familiar. And then considering that pricing insurance products depends on volume, perhaps the more individuals who are aware and willing to secure protection through insurance would definitely affect the pricing thereof. At present, there is an ongoing collaboration between the regulated non-life insurance companies and the Insurance Commission for purposes of setting up the Philippine Catastrophe Insurance Facility. Among the matters being discussed are the applicable rates and information campaigns to be launched. The discussion takes into consideration the current rates on tariff rates with due regard to the adjustment thereof, including the issue on whether or not to lift the prescribed tariff rates. As regards the second question, perhaps from my personal perspective working for the Insurance Commission, providing incentives for insurance to promote risk-reducing activities would be best addressed through the passage of a legislative act where the parameters are well defined. Through such legislative act, the Insurance Commission will have sufficient basis and or guidance in the implementation thereof. Having a mechanism for sustainable insurance is much needed nowadays, given the risk exposures that our country has and the protection that should be afforded to the consuming public. Let it be noted, though, that the Philippine Insurance Commission, in constant discussion with the non-life insurance industry, is open to consider proposals, the objective of which is to ultimately provide benefit to the consuming public, thereby reducing the insurance protection gap. And in addition to this, perhaps one circular worth mentioning is that the Insurance Commission issued circular number 2018-74 as amended by circular number 2019-19, providing therein the guidelines on investments in infrastructure projects under the Philippine Development Plan. And pursuant to that circular, participating insurance companies, there is a corresponding effect insofar as their financial are concerned. So basically, that would have an effect insofar as their risk-based capitalization, risk-based charging, insofar as the admission or non-admission of those assets. And that would be all.
Great. Thank you, Attorney Brian. I think listening now across from these three jurisdiction, one thing that we could say might be unique in the Philippines, which were not mentioned in the two other jurisdictions, is this management of tariff rates. And of course, in terms of incentive, now into the second question, Vietnam and Indonesia, the subsidy element could be in a form of incentive. Of course, it is a big incentive, but still, personally, I'm still trying to see how we can relate it to a DRR measure, or disaster risk reduction measure. Maybe not really direct, but still in general, this could be an incentive. But I think one thing that maybe the other countries could learn from the Philippines is this industry level of discussion on how tariff rates can be much better managed. But maybe also a question to these tariff rates is whether a DRR factor is already being imputed into this discussion, since you might be saying that there is now an opening opportunity to discuss a new rate. But quickly, Attorney Brian, is DRR measure being factored in these tariff rates?
Basically, sir, that would basically depend on the risk appetite of the insurance companies. Nonetheless, insofar as the Insurance Commission is concerned, we will definitely consider the DRR measures existing all across the country in coming up with perhaps setting up or adjusting to the ideal or more applicable rates, or perhaps we could the another thing being considered is the complete detarification of the existing rates insofar as far and allied perils are concerned. So those matters are currently being discussed between the non-life insurance companies and then the insurance commission, because as I have mentioned a while ago, we are in the process of the implementing the Philippine Catastrophe Insurance Facility, and the matters asked a while ago are the issues being discussed and being considered for purposes of effecting and implementing an effective catastrophe insurance facility in the Philippines.
All right, thanks a lot. Now, kind of moving already into the next segment, which is the Q&A. I actually see already one question here in the chat box. That is from Sandy Reyes from the National Reinsurance Corporation. And the question here is maybe addressed to Vietnam. I think it is. How did you link the use of technologies with insurance? And then were there other motivators to compel farmers to shift to these new technologies?
To answer the question, because if we increase the use of new technology, the cost of operation for the insurance premium will be reduced. So it could be the motivators to compel farmers to shift. I mean, to compel for the poor people or the farmer to accept the insurance production easily, because it's more affordable, or they can accept the financial service easily, like mobile money is very useful for people in the remote area, because they can accept, like they can receive the claim money faster than the others, the mean of the payment. That's one example.
Yeah.
Yes.
Sandy, please feel free to check in if you have a follow-up question to that. In the meantime, I can also swing this question to Mr. An, because you mentioned also some technologies there in your presentation. You have some risk management aspects using technologies in all the three sectors: rice sector, livestock, and the aquaculture. Now, if we look at this investment from your company, does it impact to the pricing side?
Yes, that we understand the situation of Vietnam, like as Ms. Quyên already mentioned about the poor people in Vietnam, and if they invest in the technology, maybe the cost of investment in working and in developing their job, their like their condition is quite difficult. And of course, in this situation, we had the strategy for development and for innovating of the risk, like a risk management program. We have to go step by step to change and also to improve the condition, not one or 2 days. We have to have the create a long-term strategy for step by step innovation of the equipment and also technology. Yes, for also in Vietnam, and if we of course we already discussed a lot of times to the farmers in working in this um, program for risk reduction, for risk management. However, they still ask us that it is very difficult for them, because they sometimes they set the condition and the water, for example, for the people is still, even for the people is still very low. Why? And how to improve the situation and condition for the aquaculture or for livestock or for others is rather difficult. And we, of course, we will have the strategy for long term. Yes, for long term strategy in this situation.
But
Yes.
just to drill down a bit, so you have different locations, of course, across the country, across Vietnam. So
Yes.
those that are those policyholders or farmers that are using subscribing these technologies, and then those that are not yet subscribing these technologies, are they getting the same premium rate for the same product?
At this time,
Yes, right.
because for the subsidy, like subsidy program of the government, of course, the risk situation, the risk exposure is not the main concern, because the government already have the subsidized program for all the farmers. And in this case, the risk exposure is not be mentioned and also taking into consideration. And in and if in the future, we would like to advise and also to like to consult and also to ask if the the government can help, can assist the people, the poor people in Vietnam, can innovate their farming condition more and more. For example, the government
Ôi,
can
anh nói sai hết rồi.
Sorry, there was
sorry.
background. Go ahead, Mr. An.
Yes. Yes, and if you have any comments, please. Yes.
Yeah. All right. Thanks for the elaboration.
Yes.
Right. I'd like to get back to Roy. Roy, in your presentation, you mentioned about a partnership with a technology platform. How you call it? You call it GeoRisk. Yeah. How do you see this partnership or technology platform would influence the pricing of products, if we can consider it as a risk reduction measure also? Right.
Definitely, Dante, the partnership with Celsius Pro using the GeoRisk platform will help us assess the risk that we are getting into, and help us price it better, and maybe reduce the price, because we have data that we can use in terms of pricing the CDRI product. Uh, it's time for us to optimize the use of technology in terms of not only of climate disaster risk insurance, but also even traditional insurance can help you assess your present risks that you have. But for CDRI, I think the GeoRisk platform, and we are now working with also we are working with Celsius Pro on this, will help us a lot in terms of how do we look at risk, the level of risk that we are getting into, then what are the areas or geographical areas that are more riskier than the others. So you can modify your pricing and your coverages based on the data that you can generate from this platform. Thank you, Dante.
Yeah, thanks a lot, Roy. I'm checking back again the chat box. There's other question, but here it's not a question. It's I think additional information from Attorney Brian that a legislative act can support linking DRR to CDRI. A question to the insurers: how do they see that the regulatory environment could best support integrating DRR in the insurance products? maybe All right. I think this is from Oko. Sorry. Maybe a quick reaction back to this to Roy. The question is, how do you see a legislation as a tool to this? Yeah.
One thing for sure, if you have a legislated regulation, it has to have funding. It has to have funds to support the legislation. So assuming that there are funds available to support the legislation, then it would be good for the insurers, because that would act as subsidy to the private insurers on how to go about it. But one of the things that we are looking at, there are laws now that promotes disaster risk reduction. And one thing that we have observed is that among us, especially with cooperative insurers, they are more concerned about infrastructure in terms of disaster risk reduction, like building levees, building that. What we want to see more is that how we make this disaster risk reduction sustainable, like relocating people from disaster-prone areas. These are the things that has to be implemented more strictly, because if insurers will be tasked to insure these people who are or people that are in disaster-prone areas, that would be costly for us. Just like what I have been shared, that in Lupi, Camarines North, Camarines Sur, those people that were victimized by the previous typhoon last year were relocated to a more safer grounds and constructed their homes there, made of more sturdier materials. Then we will be insuring them, because they are not landslide prone, they are not flood prone, and it was donated by the local government unit, the land to be used to relocate. So the pricing would be less, or would be like traditional insurance, or lesser for that matter, because it would be micro insurance. So these are the things that it doesn't need legislation. It's more of implementing it at the local level, so that disaster risk reduction can be done not only by building infrastructures, but by building by relocating people, using the geohazard map of Pagasa. It can help reduce costs of CDRI. Let's say, for example, during Typhoon Haiyan, Tacloban and the other areas were heavily hit. But if you look at MacArthur in Samar, because of the mangroves that protects them, they suffered less in terms of destruction. So you can factor that, because in terms of pricing your product. So it's not only infrastructure that you can use in terms of pricing your CDRI, but the disaster risk reduction initiatives by local government units, by the provincial government, by the national government, can be factored in to reduce the price. So we will insure now the houses in Lupi, Camarines Sur, because they are now in a more safer area. So the cost would be lesser. It doesn't need any legislation.
Any legislation.
Yeah.
Exactly.
I think
there was legislation at the local level. I mean, Attorney Brian, there was legislation because there was a resolution and ordinance that to allocate the land owned by the municipal government for relocation site of the victims of Typhoon Rolly in Camarines Sur. So there was local legislation for that matter, but it doesn't need really a big something that would
at the national level.
Yes, of course. So that's our experience, Dante.
Right, thank you very much. But just on the process, I'd like to check, because my time is up. It's 4:15. I'd like to check with Oko. Can you give me 5 more minutes? Or is there something coming next after this session?
Well, by me, of course, but it's up to the audience. I think if people can stay 5 minutes longer, I think that that would be that would be great.
Yeah, because I'm interested also to swing back to Pa Edi, and of course I need 1 minute or two also to wrap this up. So I hope it's fine with our audience. The meter is not reducing; it's still same number. All right, so I'll get my 5 minutes. Okay. All right, Pa Eddie, if we now come back to Indonesia now with this discussion about incentives, about also even going into legislation, because I'm still trying to drill down into the pricing structure actually of the CDRI products. How do you see this in Indonesia? You have actually also your actuarial society in the country. Do you think they can also find way in terms of the equation that that they can consider in the equation of pricing these government measures of regulation in terms of improving the disaster risk reduction initiatives? Mr. Eddie. Yeah.
Okay, thank you very much. Yeah, in my opinion, first is that how government and regulator as well industry can reach as much as possible. It means reach the economic of scale. If we can reach it, then we can reduce the cost. Yeah. So the problem is how we can reach all people, especially poor people, MSME people, and then ask them to buy. Therefore, it's very important to bring the question whether the disaster risk is compulsory or voluntary. If compulsory, then it will reach the economic of scale. Then we can follow
All
with
right.
others ways like technology and other. But if we use voluntary, then we should find out how we can get other source of fund that we can combine with the premium to reduce the pricing. So this is my opinion. Then it will become more easy if there is a regulatory framework to support this. Thank you.
All right. Thanks. It's about it's about reaching scale, which is the concept of insurance anyway, and then coming up with a regulatory framework to support it. So I'd like now, dear participants and speakers, to wrap this up. Bona, if you can, yeah, okay, we have the slides now. So just for me, also kind of key takeaways, also linking it to the first session, the session one. What we can maybe conclude here is while there are different initiatives from policy and regulation side, there is subsidy, there are also some regulations in place. There is also industry level discussion in terms of tariff, like the case of the Philippines. But yet, if we look at it in terms of the pricing structure of insurance products, where actuaries are actually looking into this, there's still a lot of work that needs to be done in this aspect, so that we could maybe probably see that there is one part of the equation that would talk about the disaster risk reduction.
Ano ba ang pwede? Baka pwedeng kung wari, di ba, ano description, ano yung first, what is, parang brief overview. Tapos,
I think
why
there is
should we doing this?
there is a sound coming in. So, and yeah, and hopefully this discussion and debate would move further into formalizing it into the equation, as the professor was saying in the first session, so that we see benefits not only to the policyholders in terms of a much more affordable price, and also benefits to the insurance companies in terms of fewer payment of claims because of certain disaster risk reduction measures that are in place. And then I think one thing that we also mentioned in the first session that we can also bring back here as key takeaways is disaster risk reduction measures doesn't mean only economic gains, but also, saving lives. And if we talk about climate and disaster risk insurance, it's largely a non-life insurance product or general insurance. And this again, from my personal point of view, if we look at savings lives through DRR, how again we can input it into the equation of pricing structure. And then last point actually is there is Bona, if we can still have at least 1 minute or two from your side to tell us, give us your feedback of this session. There is here the QR. It's very quick. It will only take 1 minute of your time. Please tell us on which areas we can improve, which other topics, for example, you want included in the next sessions like this. Otherwise, we'd like to thank once again our speakers, Paide, Ms. Kuyen, and Attorney Brian from the regulatory group, and then Mr. An and Roy from the industry. Thank you very much for taking your time. And,
Yeah, thank you very much for this invitation. I learned from others also. Thank you.
Thanks a lot.
Thank you for your time. We learn it from each other.
Yeah.
And as we promised, we will share the presentations through emails and then also through the MEFIN Facebook group.
Okay.
Thanks a lot. Bye-bye.
Bye-bye.
Bye-bye. See you tomorrow.
See you tomorrow for session 3 and 4 tomorrow.
Yeah.